In this video, we will talk about the 5 biggest mistakes that BMNR shareholders are doing when they buy Bitmine, okay? And now we will talk about when to buy. We will talk about how it moves to Ethereum. We will compare it to Esbet. And in the final point, the final biggest mistake is the focus on dilution. So make sure to stay tuned and let's smash that subscribe button and let's dive in.
Welcome to the game, I'm the wolf of Dubai.
If you don't know who I am, my name is Danny and I'm looking for 10x, 20x, 30x stocks. I made this with many other stocks already on this channel. For example, Tesla, I bought it at $17 and it went all the way down to $6. And I put all my life savings into it, so it was kind of stressful, but then it turned around to be one of the biggest investments I ever did. And not only I did it for myself, I did it also for all of my subscribers back then. So this lady bought an apartment in Stockholm, which is for sure not easy and not so cheap, guys. And this guy bought even a house in the US due to the profit. So make sure to subscribe. And if you want to be even closer to me in my personal group, then check out x10daytrading.com, where we have a software to send you all our day trades that we do on daily basis directly into your broker. You need at least $10,000 to start and schedule a call with me personally, and we see if we can help you as well. Now, in the very first step, and the biggest mistake that I see all of my followers or many followers are doing when they making mistake in Bitmine, like most of them are positive. You know, I really appreciate you in the community. I appreciate every single comment. Remember, for every 100 likes, I buy 50 more shares of Bitmine. And this is just beside what I put between $2,000 and $5,000 every single day. And this is one of the most important things that I can preach on this level, because this channel is about education, about making you very, very wealthy. Obviously, never financial advice, and you should make your own research. So when you buy a stock and you really like it, doesn't matter if it went up 50% or it went down 50%, it can always go lower and it always can go higher. So that means that actually you should never put everything that you want to invest in the stock all at once, but make limit orders, for example. Or to make it even more simpler, just buy every month. Okay, let's say you want to invest in Bitmine $25,000. You know, doesn't matter if the stock just went on a crazy rally or went on a crazy crash. Always make it this way, that you say, okay, I want to invest $25,000 into Bitmine. So I will buy $5,000 today. I will buy $5,000 tomorrow. I will buy $5,000 next month. And as bigger the difference in the purchase dates, as better there is, okay? Because the stock can do anything, as we can just see on the stock market. I mean, let's pull out the chart, okay? I mean, just over the last couple of weeks, okay, since July. So we had July and August, okay, 2 months, not even 2 months. The stock went from $4 to $160, which was the highest point, to $30 to $60, $70, and now back to $50. So you think that you, even when this crazy run on up and downs, you think you can find the perfect time to buy the shares? Obviously not. Nobody can. And that's why you split it, okay? If you have done it already and it's too late, then it is what it is. And what you should do then is just, if you want to put more into the stock, just save up, let's say $1,000 per month, $500, whatever you can, and just buy more every month, okay? And then you get a nice average down. Or if it goes higher, you win already because you have already some stocks, okay? So this is a win-win situation if you're already in, but complaining that it goes down after you went all in like a maniac, well, that's not the best idea. So let's dive into the second biggest mistake. But before that, I want to show you a small clip of Tom Lee telling us a little bit more what he thinks the market could do for crypto and for Ethereum, and have a look.
Yeah, you want to be long AI and the crypto trade, because those have been the market leaders. So the Mag 7, Bitcoin, Ethereum. But the broadening is really the financials, industrials, and small caps.
So you like them all?
Yeah, it's kind of cyclicals, AI and crypto, but not the defensives.
Your crypto calls have been getting a lot of attention lately, especially on Ether.
Yes.
Where we were talking earlier, we were debating whether it's the future of the financial system. A lot of people are thinking, people like you have said that.
Yeah, I mean, I think it's a really important moment happening this year with, the Genius Act, really greenlighting stable coins, and then Project Crypto, which is Wall Street moving on to the blockchain. I think it's a lot like 1971 when the US dollar went off the gold standard. That created the innovation of Wall Street because they had to sort of essentially create this synthetic dollar. Wall Street moving on to the blockchain is a bigger moment, and I think that's why Ethereum is essentially having its 1971 moment equivalent.
But a lot of people just see it as wild speculation and froth.
I'd say anytime something goes up, people tend to call it froth. I think they called AI a frothy trade now, but we know it has a lot of legs and it's been taking place for a couple years. Keep in mind, Ethereum is also the place where when agentic AI comes together, when you have robots and you want proof of human, you want to make sure those commands come from, a verified source. That's all taking place on a smart contract. A lot of it will be Ethereum.
Tom, thank you. We just scratched the surface on that one, but we'll have you back very soon, no doubt.
The second biggest mistake that you can do is to say Bitmine should move exactly like Ethereum is moving, okay? And this is not the case, guys, okay? These are two different kind of assets. They are not connected with each other, that if that makes 10%, the other one need to make 20%. It's not like that, okay? Obviously, it's influenced by the price of Ethereum. And just if you look into the chart or the prices of Bitmine, you can see, Bitmine went 3,000% up on the news that it changed to an Ethereum company. Did Ethereum make exactly the same news? No. Obviously, this is a huge announcement that they did. It has nothing to do with the day-to-day business, but I can show you with this point just from the very big start that they are not connected like 1-to-1, okay, or 1-to-5 or 1-to-10. It's not like a product that it's making 3 times as much on automated basis. It influenced by, okay, but there's still like what the company is doing, how the market is trading those companies, how the market sentiment is. Is the sentiment for stocks currently down or not so great? Is the market choppy and just chops around to the lower side and people take profits from the recent rally of 30 to 60, which is around 100%, guys, okay? So you can see that it's not really one-on-one connected and it will never be. So there can be quite different ways of going there. And guys, believe me, we just have the biggest V-shaped recovery that I have ever seen over the last couple of years, okay? We had the 2020 V-shaped recovery. We had the Liberation Day recovery. So maybe better explain in a clip by Tom Lee in a second, but you see that the market is totally crazy and very volatile right now, okay? So don't expect like something just because it's dependent on Ethereum. Trade exactly like that. I mean, like Ethereum today made 3.5% and Bitmine is flat. And I know the comments will be like, why it's not going up? Guys, there's so much more tools in the market and so much going on. There's so much small things that move different kind of circle, like in a watch, okay? And that's why don't be so ignorant and say like, oh, it must move 5x what Ethereum does today, okay? There is like demand for the stock, there's demand for Ethereum, totally different things for both assets, and both are in the market, so the price always depends on what the participants want to invest. So I hope that answers that question, but have a look what Tom Lee says actually to the recent market volatility. But before we diving into that, make sure to schedule a call with me personally, x10daytrading.com. We trade for you with our AutoPilot software. It could look like that, where, we make like 10% in a day, but obviously, that is very much volatile as well because it's day trading. But if you have $10,000 or more, schedule a call with me and then we can talk about if this product can help you as well. You will have the call with me personally. So I'm looking forward to speaking with you. And let's dive into the next third biggest mistake after the clip of Tom Lee.
Well, stock market at an all-time high, data points coming out that all seem very, very positive. But I just had an analyst on saying that we're in a silent recession. So what's your take on all this?
Well, we're constructive. And I think it is a good sign that many people are skeptical, because we believe this is one of the most hated V-shaped rallies, and we are making new highs. And instead of people justifying new highs, we have many people saying markets should not be here because the Fed is not cutting rates or there's tariff uncertainty. So that skepticism is healthy for markets.
Why is it healthy for markets?
Well, it's a sign that there's still price discovery underway, because if people were all bullish in the public realm, when everyone's bullish, then it's probably in the price. But when there's plenty of skepticisms and reasons to be skeptical, that allows markets to have positive surprise. And I think that's true of crypto. Bitcoin, is making all-time highs. It's kind of silent, right?
Well, when a lot of other people have been bearish and almost anticipating a crash, you've been sort of one of the people out there in the public eye saying, no, we're going higher. We're going higher in the S&P. We're going higher in Bitcoin. You're predicting, I think, even higher prices by the end of the year. So why do you feel that way?
Well, for equities, it's really straightforward. Number one, the economy has proven to be incredibly resilient. I mean, I don't think people should take a half-empty take. We've thrown massive tariffs. We had essentially a Cuban Missile Crisis moment, and yet S&P earnings are going to grow 12% this quarter. And there's not any signs really of sustained or a reigniting of inflation. There might be some inflation temporary, but that's very different than inflation dynamic taking root. And the second is people says that deficits and this current budget are so bad that no one's going to buy our debt, but yields are behaving. 10-year yield was 5%. 2 years ago, it's 4.5% now. And in terms of multiples, I think people are getting this wrong. There's a lot of people saying the market's expensive because the PE of the market should be the average of 16 or 17. Now, I've been an equity analyst for 34 years, and I used to cover stocks. I was a tech analyst for 17 of those years. I never once found an analyst who made money saying you should trade at an average PE. Like literally you either have arguments for PE expanding, and then you just have to determine when you've hit bubble, or PEs contract when the story is getting worse and there's no bottom. And we just threw 6 extinction events at this S&P 500 in the last 5 years. COVID, then a bullwhip supply chain effect that normally should bankrupt businesses. We had the fastest surge in inflation in 2 generations, the fastest Fed hikes in history. We had tariff Armageddon. I mean, literally a Cuban Missile Crisis moment for the stock market this year. And then the US bombed Iran's nuclear facilities. Each of those should have caused a crash in the stock market. And yet the S&P recovered every time. If we were talking about this as a single stock, we'd say, look, if you threw 6 things at a company and it survived, it should have PE expansion. And yet most people think the market's expensive.
The next point is, if Ethereum don't go down, Bitmine cannot go down. Well, this is also a big mistake that many people are thinking it cannot go down. I mean, we have seen in the previous category, the second biggest mistake, that the people think like just because Ethereum goes up, Bitmine will go up. But it's also the way around that if Ethereum doesn't go down, Bitmine still can go down, okay? Again, 2 different forces on the markets for 2 different assets. They are not connected or coupled with each other, okay? It's not like they are glued together. They are influenced by each other, obviously, but they are not glued together, and they're like not like a product. There's many Ethereum products that say, okay, for every point that Ethereum goes up, this product goes up 2, like 1 to 2. Okay, and then we have like a nice leverage, and then you can say, okay, I'm believing Ethereum will go up, and this product will go up 2 times what Ethereum does. Okay, so if Ethereum goes up 3.5% today, then you will have like a 7% up in that product. There's different kind of products. There's 1 to 2, 1 to 3, 1 to 5, and so on and so forth. But Bitmine can go 1 to 12 with the limited amount of risk. Okay, so that's the beauty why me personally going for Bitmine instead of going for Ethereum or a product like that I just described. Okay, so but make sure that if Ethereum doesn't go down, there could be something with the company, there could be something with the team, there could be something with the shareholders of Bitmine, that Bitmine can go much lower. But this will for me be just a much bigger opportunity to be part and have a bigger stake in Bitmine before it goes to 250, before it goes to 500, before it goes to $1,000 per share. The next biggest mistake is to compare Esbet and Bitmine like that would be like brother and sister in the same company. So first of all, Bitmine, what they are doing as Ethereum company is doing it much faster. Okay, so that's number one. The second point is that it doesn't matter what they do, they will never have the same performance. I will show it to you. Bitmine is totally crashing the performance of Esbet. So let's have a look what today says. Okay, so and I will show you how crazy the moves are. Okay, so Ethereum makes 3.65% on the day. Bitmine is pretty much stable. Okay, doesn't move at all. But then you look into Esbet, I have somewhere here on my list, you can see 1.3% up. So you can see that those aren't so connected with each other. And if you're looking into the 1 month's performance, you can see that Esbet actually lost about like 7% in 1 month's performance versus Bitmine doing 30%. Okay, so Esbet, just because it has a better MNAV or whatever, it doesn't allow us to buy so much Ethereum like Bitmine does. Bitmine doing like an extremely fascinating job. And even I see one of the biggest influencers talking about Esbet, my colleague Chicken Singapore on X just posted that. Facts. Esbet is a consistent underperformer versus Ethereum and Bitmine. I chose to recommend the wrong horse, that's on me. Or maybe some of you jinxed follow me into this trade. Either one, it's still on me. Have not taken any action, still riding both. If I cut, I will let you know. So as you can see, like he's already doubting a little bit about Esbet. Yeah, because as I said in many videos, guys, the winner, the better company will have a 3 to 5x better result. Okay, so if Esbet is making 100%, then Bitmine will most probably make 300 to 500%. You have seen it in the short period of 1 month, and imagine what the difference will be in a matter of a year or 2 years or 3 years. Okay, and now let's dive into the last biggest mistake that you can do. One of the biggest mistakes that you can focus on when you invest in Bitmine is the dilution, okay? Dilution here, dilution there. Obviously, they have more and more shares on the market, so the market cap goes up. And also the dilution means that while the market cap goes up, the stock price still is the same, okay? Because just more shares on the market having the same price, giving us the push into the market cap. Now, everybody is focused too much on the dilution. What will happen to dilution? What will happen about the stock price? They need to do much more. But in the end of the day, guys, it's not about the dilution. It's about which other tools they have, okay, to buy Ethereum. Which other tools they have to make the company much more worth, okay? What other tools they have when the market is not so good to actually go higher, okay? And this beside dilution and giving out stocks, which is obviously the biggest and fastest way to accumulate Ethereum, they can also do the staking, okay, which gives us around like, 3 to 4% in a kind of return. And then when you translate that, if they want to make like a dividend, maybe, they will give like a 2.5% dividend for all investors in the very beginning, right? But then they can trade also Ethereum. They can sell some Ethereum for profits if they bought it for 4,000 and think Ethereum is expensive, sell it for 20,000, buy back later on, use the profits to give more dividends. They can use that, proceeds of the sale of Ethereum to buy back more shares, which is absolutely insane. They have a $1 billion worth of share buyback buyback program. So as you can see, this is just the tip of the iceberg, what they can do. So dilution should be not your main focus and your first concern or worry about this company. They have much more they can do. So make sure to stay tuned to never miss that with us on daily basis, because there's so many news out there that you miss if you are just long-term investing. And we trade for you. We prepare those trades. We send it to your portfolio. It's all done for you with our software. So if you have $10,000 or more, check out xtendaytrading.com and be part of our family after a short call with me personally to see if it's something for you. And looking forward to speak with you. And make sure to stay tuned, subscribe, smash that notification bell so you never miss a vlog and a breaking news on Bitmine. And with that said, the grass is greener always on the other side.